Let's start off with talking about fundamentally the operating model. You've worked with a number of organisations. I know that you're investor and chairman to a beef company which is based in Scotland. You guys have had to change your operating model in terms of diversification. So you understand very closely some of the challenges around looking at both from an operational standpoint, but also the diversification of getting new clientele and staying operationally or profitable, should I say. Just for the sake of our audience, talk about some of those challenges and how you guys shifted your operating model and what were you seeing at the time of lockdown versus where you are right now at the moment?
Yeah, I think that's a fantastic case to spend some time on. So this is a medium-sized company, roughly 70 million turnover, high-quality beef. It's the largest independent slaughterhouse of Aberdeen Angus quality beef in Scotland. And the vast majority of the product is sold towards out-of-home food service, high-end restaurants, if you like, distributed either via the London meat market or via exports directly into areas such as Monaco and Japan and South Korea. I would say that roughly 80% of the product customer mix were out-of-home customers buying hindquarters. If you kill an animal, it has to forequarters for hindquarters, obviously, and you have the high quality product from the hindquarters, like the steaks, the rump steaks, the fillets, and so on and so forth. Whereas the forequarters often turn into mincemeat and hamburgers or the added value products that consumers mainly buy from retail. So our business was primarily focused on hindquarters, high-end food service customers. Because of COVID and the change of consumer behavior, we have seen that there is a shift from the channel where people tend to consume. So rather going to a restaurant, because the restaurants were closed, if you like, they would go to retail and buy products to cook at home. So our customer mix has shifted from wholesale out of home towards retail. And in general, that has a negative effect on your margin because of the purchase power of the large retailers, if you like. Not unnatural, but it is what it is. At the same time, as soon as consumers start buying products at retail, these become products that are relatively easy to prepare because they are no professionals, they're home cooks, if you like. And these are products they would like to stock in their fridge because not just loo paper and products like that have been stocked, but also minced meat, as an example. That meant that we also saw a change and a shift in product mix from steaks towards mince, if you like, from a focus on hindquarters to a focus of forequarters. Also there, unfortunately, a negative impact on your bottom line because the margin on mincemeat and hamburgers is far lower than on high quality steaks. So there was a double whammy. Because of some support, obviously, from the government, among others, we have had a little bit of time to shift the model, which now means that far more of our product is sold directly towards consumers via retail. It's a different product mix, as I've explained earlier, but also a far lower volume. So in order to get the balance right, we probably had to decrease our volume with about 25 to 30%. Which is actually the number of animals entering your slaughterhouse and be killed and butchered at a later stage. So the business is now smaller in terms of volume, but in terms of profitability, which is marginal in this particular business, it's a commodity after all. We're kind of back now to pre-COVID, to a pre-COVID situation, but the business looks completely different. It's smaller. That means we have less employees on site, which is needed because of all the COVID measures that we've taken. There's a certain distance, temperature issues. There's all sort of practical and operational issues that have been taken, as well as the marginal kilos that you would sell by slaughter more more cattle, they would end up in a very unfavorable customer and product mix. So you would not really make money anymore on additional cattle, which actually means that we do not seek any growth anymore. In the past, we had a model where we were looking for growth because we had profitable customer and product mix. Now we have a situation where we actually manage the status quo, where we don't want to grow more volume because the more we do, the less profitable we would become. So a clearly different business from a year ago. So I think it's a good example of what can happen to a business when a disaster like COVID just strikes.
Please don't forget to like, share, and subscribe for conversations just like this.